To be or not to be, Mr. Chairman, I think that is one of the important questions, and if I could think of an agency that should not be, it would be the CFPB. You know, the question was posed, do we have or don't we have better things to do with our time? And Mr. Chairman, I would point out that an agency whose funding mechanism is unconstitutional, I think that deserves our time. I think an agency that has gone beyond its mandate, that deserves our time. I think an agency that regulates and legislates by rule enforcement versus following the APA, the Administrative Procedure Act, I think that deserves our time. And so even though we may be getting into the minutia of some of these issues or some of these rules, they deserve our time. And most banks, credit unions, and independent community banks will tell you that one of the biggest issues for them is the CFPB. We've all seen the negative impact of practices like regulation by enforcement and other questionable agency actions. As we've heard today, the impact of this growing compliance burden from the CFPB is evident as the number of financial institutions continues to decline. Mr. White, in your 2022 Wall Street Journal article, you noted that James Madison emphasized in Federalist number 58, Congress's power of the purse was intended to be the powerful instrument preventing all the overgrown prerogatives of the other branches of the government. Please explain how this sentiment is applicable in the situation of the CFPB and what our founding fathers were warning us about.
Well, it's important that, thank you for your question, Congressman. It's crucial, and Madison recognized that it's crucial, that questions of the writing of laws, the spending of federal money, the collecting of federal money, has to begin first and foremost with the part of government closest to the people, Congress, and in particular, the House of Representatives. And I just want to point out to this end that a decade ago, when I was still in private practice, I helped to file the original constitutional challenge to the CFPB's funding and its executive independence. Our client was not a big bank. We talked to the big banks about the case. They were interested in the issue, but they did not want to challenge the regulators. It was a West Texas community banker who was willing to stick really stick his neck out and say, this is unconstitutional and I want to take a stand. And I think that it's because the smaller banks and the regional banks have felt more than any other of their competitors the compliance burdens, the regulatory burdens, the way that technocratic rules are being imposed on community banking. And I think that also helps to explain in part the era of massive consolidation we're seeing at the community and regional banking levels.
Mr. Chairman, you know, I want to point out, you know, it's those community banks that are feeling the burden of the CFPB, that if you're Joe the plumber or you're the local mom and pop, you know, it's the relationship that you have with the community bank. They're going to be your lender. It's not the big boys on the block, you know, that have and they're feeling it too, quite frankly. But as you see the whittling down of the community bank, what it's doing to rural America, what it's doing to suburban America, enough is enough. The CFPB has unprecedented power and enforcement authority with nearly no accountability under its guaranteed funding mechanism. The CFPB estimated its funding at $717 million FY 2021, $734 million for FY 2022, $750.9 million in FY 2023. Is it sustainable to allow a rogue agency to continue down this kind of path? Please describe those dangers, Mr. White.
Well, it's not, and if anything, Congressman, the problem is only getting worse the more that the agency leans into some of the least accountable tools for policymaking, even further away from notice and comment rulemaking towards enforcement discretion, opaque supervisory authority. If anything, Congress needs to try to pose even more transparency and procedural regularity onto this agency, in addition to the other accountability measures that we've been discussing.
And to that point, is it fair to your small regional banks, or quite frankly, to any business, but you have this uncertainty in the regulatory regime, that suddenly you're afraid of the heavy hand of government because of a rule? Is that a realistic environment to be operating in?
No, not at all. It's hard enough for the community banks right now to compete, given some of the technological advantages and other just basic market competitive advantages that the bigger banks have. This is the worst possible time for agencies to impose even more disproportionate burdens of regulatory uncertainty on those competitors.
Mr. Chairman, I do have more questions. I'll submit those for the record. I yield back.